Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello everyone and welcome to the London Session Open. It's Monday, September 22nd, 2025. So last week we saw the Fed cut rates by 25 basis points on Wednesday. The first cut since December 2024, sparking a rally to fresh records, with all three indices logging weekly gains amid dovish signals. We of $3,707. Let me check if the chat is here. Can you guys hear me? Just checking. Can you guys hear me? So let's go back. We were talking about gold. I was saying that gold hit a record of $3,707 because the dollar eased. We saw the dollar breaking below 97 points because of the rate cuts, and now the markets, gold did the new all-time. Okay, let me check 1 second. Yeah, we have a new all-time high. Exactly. So we are at an all-time high. We'll explain why, and we'll go to the charts after we finish the calendar, and we'll see. 1 second, let me check if the guys, can you please share my screen? Yeah, there it is. No, the other way around. Yeah, great. So we'll check what we have this week in terms of economic releases, high impact news, and after that we'll go to the charts and see the charts of the gold, the Nasdaq, if you want, guys, or the Euro USD, the dollar index as well. We'll go through each one of those. So let's get to the key economic data releases and the high impact news calendar. So okay, we start with Tuesday. Why? Because on Monday we don't have anything, no high impact news on Monday. So we have a holiday in Japan. All right. So that means thinner JPY trading and low volume in an Asian session. That's pretty much it. Now let's move to the next one, which is the S&P Global Manufacturing PMI. That's an important number. It's a moderate impact number. If it comes above 50, it signals expansion, lifting industrials, and if it comes below 50, it adds dovish pressure to the dollar. The next one is the S&P Global Services PMI. Also, the 50 points is the important number. So if we come above, or if we score above 50, that means that there is expansion in the services sector. Below 50 is bad and dovish for the dollar. But the previous was 54.5, and the expected is lower at 53.8. So it's already expected to be worse or more bearish for the US dollar. Okay. And the next one is the Fed Chair Powell speaks. Powell will speak on Tuesday. Probably he will address all the concerns that the market are having after his press conference, because during the press conference he stated that the rate cut was only a risk management tool, or or it was just like a way to manage risks, because they started seeing a weakening in the labor market. Okay, so the markets lost hope that the cuts will continue. That's why we saw a rebound in the US dollar, and then we saw like a correction in other instruments like the euro. The euro dropped like two round figures from 1.1920 to 1.1720. So yeah, that's mainly because of Powell's remarks on the press conference. So probably he will be addressing the concerns to calm the markets and give a clearer guidance on what they're going to do in the future. All right. So that's for Tuesday. Let's move to the next one. Bold Explorations is asking if we can give a trade in London session. We'll go through the charts, the GBP and Euro charts, and we'll see if we can find something. Yeah, sure, why not? Okay, all right. So now we move to Wednesday, September 24th. What do we have? We have a holiday in South Africa, which is the Heritage Day. So congratulations for whoever is from South Africa. Then we move to the US numbers. We have new home sales for the month of August. The previous reading was at 652,000, and the forecast is slightly below at 651,000. So if this number comes in higher than expected or higher than the previous, that's a positive sign for the US economy. Hence, we see like a buying pressure on DXY, and vice versa. If it comes in lower than expected or the previous number, that's negative for the US economy, and we might see some bearishness on the DXY. And then we have the crude oil inventories. That's a high impact, especially after last week. We had like a shortage of 9.285 million barrels in the US crude oil inventories, which pushed the West Texas oil higher. So we'll see this week what happens to inventories, because lower supply, it's either like one of the two. It's either very high supply, a very high demand, or very low supply. So both of them are positive for the price. It means like higher oil prices. If we have high demand and low supply, or both, or one of those, it means that we have higher prices. Okay, so higher energy prices could also mean what? It could also mean higher inflation, because everything needs energy. Manufacturing, whatever you like, whatever you can think about needs energy. So higher energy costs or higher energy prices means higher inflation or stickier inflation. All right. So now that's it for Wednesday. Let's move to Thursday. Yeah, we have an interest rate decision coming from the Central Bank of Switzerland, which is the Swiss National Bank. The previous was at 0%, and the forecast is at 0%. So the actual will probably come in at 0%. They don't have interest anymore because they beat or they beat the inflation that came in post-COVID. So, by the way, guys, Switzerland was the first country or the first economy to beat the inflation, or to win the battle against inflation post-COVID. So yeah, that's that. And then let's move to the US numbers. We have durable goods orders. The previous reading was at minus 2.8%. The forecast is an improvement at minus 0.4%, but also still, but also still negative for the US dollar. It means that this number is mainly about business spending. Okay, so businesses spending. If it beats, it eases the slowdown fears. If it misses the forecast, this could be dovish for the US dollar. Okay. Then we have the very important number of GDP, which is the gross domestic product for the second quarter. The previous reading was at 3.3% for the quarter. The forecast is 3.3, so no change. Let's see what the actual comes in at. That's a very important number because if it comes in higher than the previous or the expected, that could boost the US dollar, because that would mean there is no need to cut rates now, because the growth is good. So we can keep, or the Fed can keep rates higher to control inflation and bring inflation down to 2%. So this could be very bullish for the dollar. This could be very positive for the US dollar if it comes in higher than the previous or higher than expected. And of course, if it comes in like negative, lower than expected or lower than the previous, this could raise the odds of another rate cut by the Fed. We have a meeting in I think the end of October. We have another Fed meeting. So markets are now pricing in a 90% chance that there will be another 25 basis points, but it's still too early to judge, because this month USD more weak. We'll talk about the USD. We'll move to the charts in a bit. Just let me finish this point. I was saying that what was I saying? I forgot. Yeah, I was talking about the GDP. I was saying that if it comes in lower than expected, this would raise the chances of a rate cut. And the markets so far are pricing in a 90% chance that there will be another 25 basis points. But it's still, I was saying that it's still early to judge now, because we haven't seen the growth numbers, we haven't seen the inflation numbers, and we haven't seen the we said growth, inflation, and labor market. So we need to see like the different numbers coming from those different angles of the economy, and then we can decide. So the pricing in of a 90% chance is still premature, I think. Okay, then we have the initial jobless claims. The previous reading was at 231,000. The forecast is a worse reading at 235,000 jobless claims. So if it comes in higher than expected, that's negative for the dollar. If it comes in lower, like less people are claiming to be jobless, this would mean positivity for the US dollar. Then we have the existing home sales. The previous was 4.01. The forecast is a drop to 3.96. So if this comes in higher or positive, that's positive for the real estate market, and vice versa. If it comes in lower, it means that it's negative for the real estate market. Okay, that's it for Thursday. Let's move to Friday. Okay, let me check if you have any questions. Still good. All right. Let's move now to Friday. We have the core PCE, which is the Fed's favorite inflation gauge. They like this one better than CPI because this includes more components and it's more representative. We had the session bell ringing. So now we're officially inside the London session. Anyway, so back to PCE. PCE, we have the core PCE and we have the PCE. There's a small typo here. It shouldn't be core. It should be core PCE here and PCE price index without the core. So the core is expected to come in lower, so a drop in inflation. The previous reading on the PCE price index is at 2.9. The forecast number is not published yet, but if it comes in lower than the previous, this would mean another or higher chance of a rate cut in October. So another rate cut, another 25 basis point cut. Okay. So that's pretty much it. What else do we have in the markets? I think we covered everything. It's time to move to the charts. But before moving to the charts, as always, do you have any questions, guys? Do you have any questions? Shoot. So this week we can expect USD to be strong. Not necessarily, depends on the numbers. That's fundamentally speaking, but we'll check the chart. Maybe the chart would tell us to be bullish on dollar. Let's see. Let me open the, what's it called? Any questions? Any questions? Okay. I've watched the recent Beyond the Chart series, and this was we were making ahead of the week, so I'll open it both fundamentally and technically. You're welcome. Okay. Okay, so now let's move to the charts. You guys don't have any questions, so let's move to the charts. As always, we start with the dollar index. Yeah, there it is. With the dollar index, let's start with the weekly chart. So how did last week close? Yeah, there was like a very strong break to the downside, but there was also a rejection. So this is a bullish sign, not a bearish sign. Okay, so even this week, even like since the market opened today, it broke last week's high. So the US dollar is looking bullish on the weekly chart. Okay, so that's something to pay attention to. Let's take a look at the daily. Yeah. We have something that might mean we're getting closer to a reversal in the US dollar. So we broke the low here. We broke below 96.30. And if we look closely at the MACD, we can clearly see there's a positive divergence, meaning that the price is making lower lows, but the momentum is not. So that could mean that we might be looking at a reversal to the upside. By the way, if you look at the dollar index at the monthly chart, look, we are very close to the major uptrend. So we might be seeing a reversal to the upside. And by the way, guys, I see gold, dollar going up back to 120. I know this might sound crazy, but it's just my analysis. Which could mean like very bad euro dollar, very bad GBP, a crazy drop in JPY, even a further drop than the one we are currently witnessing. So yeah, basically the XY is starting to give strength signals, but it's still not confirmed. Okay, so in order to be sure, I need to see 3 higher highs, 3 higher lows, which means an uptrend. and only then I can start looking to long the DXY against other instruments. But so far it's still bearish, but it's giving bullish signals. Okay, so that's for the DXY. Let's move to what's it called? The euro dollar. Yeah. So we're almost there. As I told you in a previous session, we are still in a downtrend, but it broke this downtrend. If you can see, like 1 second, let me show you. Like, do you see this move, like up, down, up? Look at the XY. It's exactly the opposite, down, up, down, right? So since the dollar index is at a trend line, even though we broke this, okay, even though we broke this trend line, we still didn't break above the previous high, okay? So as long as we're below this, for me, I would be looking to sell Euro USD anywhere around this area, which is like close to 1.23. All right. So that's the weekly. Let's go to the daily. Yeah. I had this trade, closed 80% of it, and I have still 20. I closed like 80% at here, like at 1.19. It went up a little bit, then dropped back down. I still have my 20%. I'm waiting for those. And by the way, my stop loss is now here. So it's basically risk-free. It's still on the trend line, so it's giving bearish signals, but it's still bullish. Like exactly the opposite of what's happening in the dollar index. Okay. Let's check. Yes, we also have a negative divergence here. We have a higher high, but on the MACD, we can see a lower high. Okay, so that's a negative divergence. It's starting to give weakness signals, but it's still bullish. So be careful, guys. Let's see. 4 hours is closing in 2 hours before our candle. It's still good. It's still above the major trend moving averages and trend line, so no reason to be looking at shorts. Like this is, we have like a short-term trend here. For example, once I see it do this, I'm looking to buy because we're still bullish. If I see it doing this, then I might start buying again. Okay. So after it does this, it retests the trend line from the outside, it breaks previous high, and then on the 50% retracement of this, I'll go in with my stops below this. And then I can target all the way up to here. Okay. That's for the euro. Let's see the GBP USD. GBP USD, let's start with the weekly. Yeah, this one hit TP. Okay. So like this was on the day of the rate cut. It hit the TP and then dropped back down. Initially, the stop loss, now it says 1 to 10 risk reward, but it's not really 1 to 10 because initially the stop loss was here. Okay, so it was 1 to 4, I believe, or 1 to something. But after moving my stop loss, it became 1 to 10. So just to make things clear. The daily, you know what? I'm done with GBP USD, as I am done with gold for the year. I'm done with GBP USD for the year. I still have my 20% of the position of the euro position running, and I have the USD JPY. Either they hit stop loss or TP. Let's see what happens. But other than that, I'm done with GBP USD. because as you can see, guys, it was in an uptrend, then it broke below, and now it's retesting the uptrend from the outside. So that's scary for me. That's why I placed my TP around this zone, like the drop. So I didn't want to risk holding for new highs. This was good enough for me. So that's the reason why I exited my trade, or I didn't exit. BTP got it. Okay. So the 4 hours is still bearish. It's below all moving averages. And the daily is now at a very important moving average, which is the 50-day moving average. And on the way, we have the 100-day moving average, or 126-day moving average at 1.341. That's a very important level. If you're planning to take some trades on GBP, this level would be great. This one here, 1.341. Okay. What happened in gold? We'll get to gold in a second. USD JPY, please. Yes, sure. Okay. All right. So we're done with GBP USD. Let me just take a look at the 1 hour. So if I want to trade GBP USD, I place an alert at 1.341 and wait for my setup there. And once it's there, I'll execute on 1 hour or 30 minutes time frames. Okay. Let's move now to JPY, the weekly. Okay, so what's a little bit uncomfortable for me is that look where it got rejected from. I'm selling from here, and it reached here by like when Trump was not Trump, when Powell was talking. So look where it got rejected from. That's an important level. That's the upsloping support, which is the trend line of the channel, the small channel. So I didn't like how this got rejected. So, but I will not change my plan. It's still valid. My setup didn't get invalidated yet, so I have to stay in the trade. But to be honest, I don't like how this closed. Let's wait and see. As long as it's below 151, I'm still in the shorts. Okay. What else do we have? We have the daily. Yeah. Look what happened here. It got rejected from the 126-day moving average. That's my favorite moving average. That's why I don't like the rejection. I'm not feeling good about this one, but we don't trade what we feel. We trade what we see. So far, I see that it's still valid. It didn't get invalidated, so I have to stay in the trade. Let's take a look at the 4 hours. Yeah. So it's basically doing like it's trading in a range, a sideways range. So nothing much. Let's wait and see. Maybe it decides to retest this level, which is the like somewhere around 150. Then it starts dropping down. No idea. Let's wait and see. For that someone, there's someone who asked me about USD JPY. If you're trading USD JPY, like day trading USD JPY, I don't recommend because it's in a range. So either you analyze the range well and see where but no, I wouldn't trade it. It's very like, it's very choppy, and I wouldn't trade it if I were in your place. So forget about USD JPY. Let's look at gold. All right. Start with the monthly. The monthly is very, 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 very bullish. Okay, as you can see. The weekly is also bullish. It tried to close bearish last week on Friday, but it like at the very like at the end of the New York session on Friday, it went up really high and closed very close to the all-time highs. It closed at 685, I believe, and then we saw it breaking new all-time highs in London session. So we're making history together, guys. Okay, weekly is still very bullish. Daily is still very bullish. It's outside the bands, it's above all moving averages, and it's like still going up. Nothing to make you think that it might go down, because like recently I'm hearing some people, I'm hearing some talks about shorting the gold now because it's very it's very overbought and now it should go down. That's bullshit. Excuse my French. 4 hours is still very bullish. Guys, please don't sell gold unless you're day trading or scalping. Otherwise, please don't. It's the most bullish chart we've seen all morning. Okay, still going up on all time frames, literally. Monthly to 30 minutes, it's all bullish. So let's talk some forecasting. You know when I will be very happy to buy gold? If it drops back here to this area, 3,450. Doesn't mean that it will go there. It might never go back there for like another 2 years, but I'm just saying. I stopped trading gold for this year after I took profit on my trade at 3,600 or a little bit lower than that. The only level that would intrigue me to re-enter gold is here, 3,450. If it reaches there, I'd happily buy, targeting $4,000 per ounce. Okay. Now, there's another theory that after we finish this impulsive move, all of this impulsive move, we might be moving down to retest this level, which is close to 3,100, 3,075. But that's just a theory. It might not happen. It might happen. Depends on the future of the DXY, the US dollar. If the US dollar decides to turn from here and start going up instead of and reverse the downtrend and it starts going up in an uptrend, we might see the gold dropping to those levels, but that's like a far-fetched forecast. But it's a level that gold might visit again. So we might see a drop of $600 on gold, but that doesn't mean we can never time that. Is it possible? Yes, it's possible. Is it possible to go back below 2,000? No, it's not possible. But is it possible to go back to early 3,000? Yes, it's possible. So that's what I'm saying. I'm saying like the possibility is there, but you only trade what you see. So far, it's still very bullish. Do not try to short it. And for me, if it goes down to those levels, I'd happily buy. I don't want to sell. I don't want to make money on the way down. I want to make money on the way up on gold because we're in an uptrend. All right. Which economic fundamental is best for swing trading? None. No fundamental or no piece of news is good for swing trading. Swing trading is basically it's the essence of technical analysis. You analyze based on higher time frames, and you wait for your setup to form. Once it forms, you enter with your predetermined stop losses and TPs, and that's it. So you don't need fundamentals to swing trade, because usually on swing trades your stop losses are very far, so you're not affected really by the whipsaws or the daily noise that happens because of news or economic releases. All right. So in swing trading, you don't really need fundamentals. If you're talking about execution, you don't need it. No, of course, but it's good to have a fundamental background so that you have a story behind the numbers, you have a story behind your trade, you remember your trade with a certain a certain story, so that back in 2020 and on August 7th 2020, that's a real story, by the way. Gold dropped from 2075 to 2000, I think, or 1800 in one day. Why? Because on that day, on August 7th 2020, Russia claimed that they came up with the COVID vaccine. So you see how you use fundamentally, you just see the story behind the number, but it's not really important in execution, because at that time we were already in gold buys, and when it reached that level and when it broke back below 2050, we closed our buys. So basically what I'm saying is you don't need it to execute or to make money. You need it to understand what's happening and to ground yourself with a story. Okay. Explain everything. No questions is there. No questions. No questions. Perfect. Let's take a look at the Nasdaq real quick, and then we call it a morning, not a day. It's also very bullish. The weekly is super bullish on Nasdaq 100. The daily is also very bullish. We're close to all-time highs. 4 hours. We started to see a beginning of a short-term correction. Where might it be going? Yeah, so this level is key. 24,200, guys. You know what? Let me do this. Add alert. Add alert. All right. So what else do we have? Let's move to the 1 hour. So I believe it'll be dropping till the beginning of New York session, and on New York session it'll be somewhere around here. Then this like flash drop, it'll drop here, like sweep liquidity and start going up. So I think that's what's going to happen with the Nasdaq. So again, it will reach here, then sweep liquidity from this area, and then start going up. But that's just a theory. It's not a financial advice. 4 hours. Yeah, I believe it still has room to go up. It still has momentum to go up. So nothing to make us assume that it's dropping, unless we break the first signal would be breaking below. Closing the day below 24,400. If it closes there, like 100 pips from here, or 100 points from here, if it closes below 24,400, this could be the first bearish signal for USD 100, US 100, which is Nasdaq 100. All right. Any more questions? All good. All right, guys. So I hope this was helpful. Thank you for tuning in, and I hope to see you on the next one. As always, trade responsibly. And if you need any questions, or if you have any questions, or any questions came up, you know where to find me. Take care of yourself and trade responsibly. Cheers.